Hello, CannaFam. Coming to you from the Blinc Group. My name is Sasha Aksenov, co-founder and Chief Innovation Officer here at Blinc. I bring to you today Gary Krimershmoys, our Chief Investment Officer.
Director of Corporate Development.
We all wear many hats.
That's right.
But one of the key things that Gary does is he takes the burden off of me from speaking to investors, and he communicates the company values and everything else as we're to the investors as we're going through our round. And he also does investor outreach, and he basically communicates with the investors and the investment community, so we don't have to, so we can focus on product innovation, on product lifecycle, sales, support, and so on and so forth. So why I brought Gary here today is, as one of the co-founders, I'm always asked the hard-hitting questions about where's this industry going, what's happening, we're seeing this and we're seeing that, and what happened to you during vape crisis, and and so on, and what's going to happen 2 years from now, like I'm freaking Nostradamus. So I brought Gary here, and Gary, the first question, the top question, obviously, as we've been going through, first and foremost, since last August through vape crisis, which has now subsided, and nobody is as interested in it because we have coronavirus now, right? So,
yes.
So we keep getting hit by one after another, by things one after another, and investors want to know, what is this doing to the cannabis industry, specifically, in my case, in our case, to the cannabis ancillary segment, but to the industry as a whole. I think this is something that needs to be addressed, and I'm sure a lot of companies that are trying to go through rounds right now are trying to figure out the right answers to those questions. So what would your response be to a question? So how are you guys handling these crises one after another, and what steps are you taking to push through them and emerge victorious?
Sure. Well, the cannabis industry was much different a year ago at this time. This was before the vaping crisis, this was before coronavirus, this was before the crunch of investments period in the industry. So what happened in terms of timeline? Last year, a lot of companies, especially public ones, promised this much in revenue, and they delivered this much, so 50% less than they promised. Their investors were investing in companies that they thought was going to go cash flow positive in 2019 or 2020, and all of those expectations were pushed out. So it resulted in a lot of companies' valuations coming down in the public market, and investors being a bit more selective and reticent about where they put their money. That's number one. Then toward the end of the summer of 2019, the cannabis vaping crisis hit, which actually originated and was all in the black market, and the illicit market made the news headlines say that cannabis is damaging people's health and potentially killing them. That was conflated with things going on at Juul, with marketing that was targeted toward teenagers, which has nothing to do with cannabis vaping, but the news headlines conflated everything and made our industry have to retrench and have to focus on quality and safety of vaping hardware, which conversely was something that Blinc was talking about for the previous year to year and a half, based back to the foundation of the company. So the cannabis vaping crisis lasted for a few months as the vitamin E acetate kind of brought the illnesses up nationally, and like a bell-shaped curve, it really ended in the fall, November and December of 2019. That was a two-edged sword for a company like Blinc Group, where during the crisis, it was a gut punch. We had delayed orders, investors were very scared, and a lot of other companies in the vaping space, including Kush Holdings, Green Lane, Tilt, some of the publicly listed companies, all felt various effects from this. But when that subsided, companies that had high quality products that were dealing with the regulated market, not the illicit market, really benefited. There was a real drive toward quality and away from fly-by-night operations that were selling things cheap or buying things directly on Alibaba.
We saw this overnight. The conversation, literally almost overnight, within a couple of weeks. In cannabis times, this is overnight. The conversation changed from how cheap can I get this cartridge to what are the materials? You know, what is it made of? What guarantees do we have behind? And price was the last thing on their mind.
That's
That was a fantastic shift. I think for us as an industry, that was a great shift. And I think this, you know, as we progress and as we develop and as we mature as an industry, there's going to be more trust.
That's right, that's right. It's kind of quality and compliance came to the fore during that time, and the companies that had that in their DNA did have to be smart in how they managed their money and how they managed client expectations, but those companies in February really started to benefit, and we were one of the beneficiaries of this consumer and customer focus on quality and safety. Then what happened after that, as the cannabis industry was recovering and even some of the publicly listed stocks started rallying in January, the coronavirus came from China, and when it was a localized issue in China, it only affected the supply chain, and that was manageable for the international markets. But once it started spreading to other countries around the world, Iran, Italy, and then throughout Europe, United States, and far-flung nations, the calculus changed. So the two main issues with coronavirus as an economic deterrent or an economic problem were that, number one, travel and shipments and meetings were curtailed substantially over February and going into March. The second thing that happened is people had to really re-examine their Chinese supply chain. And in cannabis vaping industry, that was one of the most important things that redid a calculus in terms of, can I get my hardware in a reasonable amount of time with the quality that I expect? So for companies like Blinc and a few others in the industry that were prepared and had redundancies, meaning all of our products were not made in one factory. And when that happened and that factory was shut for some of our competitors, you could not get your product anywhere else. You had to just wait until the factory came up and went online. When we work with companies, we work with a handful of CGMP and ISO certified factories in China, where we had a little bit of redundancy built in right there, and then we had an extra layer of redundancy built into the supply chain, because the factories are not producing all of the components; they're assembling components that came.
Now, what are the lessons learned from that, and how could that be applied as best practice, perhaps for some of our colleagues and perhaps even competitors?
Sure. For the vaping hardware industry, our clients are really B2B entities like multi-state operators in the United States and LPs in Canada and regional extraction companies. So if you want to keep your supply coming and your supply chain taken care of, you need to have redundancies built into the system, meaning redundancies in the factories that you use and redundancies in the supply chain that comes to the factories. Mm-hmm. Now, that is something that really nobody thought about as of last year.
People found a carton, they were comfortable with it, and they forged on. Right? They didn't look and they didn't plan one step ahead, two steps ahead for the impending crisis or for the next vape crisis, which we know is probably going to come. It's probably going to be hardware oriented, but that's my opinion. You know that.
Yep.
Because of all the crappy things people are doing, but regardless, I think building in contingency strategies for your entire value chain is important, and that's how you build a resilient company, and that's how you push through crises like the vape crisis and coronavirus and anything else is going to be thrown at us down the line, and also the regulatory compliance is going to come down the pipe. If we are ready as an industry, and companies within the industry like ours and and many others are ready and prepared for what's coming 1, 2, 3 years ahead, we're going to emerge victorious. We're going to push through this. And that's, I believe, from everything I learned from Gary and from some of our investors, that's what makes a company investable.
Yes.
And that's because that guarantees longevity and that guarantees growth and scale.
So right now, the calculus for investing in the cannabis space, whether it's vaping or other parts of the space, has really changed from March of last year. So the calculus now is, number one, is the company lean and is it managing its costs effectively? Number one. Number two, is it still showing that it can grow with the cannabis market as the market expands? Is this company expanding also? Number three, are they looking to have some cash and have some something in the bank that lets them survive for a few months, and now it's kind of 6 to 12 months is the perfect target. Can this company survive in a more constrained capital environment? It's a chicken and egg scenario because investors are now very cautious about investing, even though last year at this time they were investing like drunken sailors on an outing. They were throwing money at the companies that just showed top line growth. That was the only thing that counted. Now, cost management, growth, but moderate growth, intelligent growth matters. And how is this company dealing with the regulations and the changes? Is it a flexible company? Is it a company that can roll with the punches, as they say? Companies that can exhibit that are going to survive and prosper because crisis, and we've had a few of them in the cannabis vaping space, and overall, what doesn't kill you makes you stronger.
There you go. So that's a few words from Gary Krimershmoys, who's been in the trenches with us for a couple of years now, going through all the ups and downs, and we've emerged victorious, as you've probably seen for those who are following us. Although for those who are not, make sure to visit theblincgroup.com. We have a blog section where we'll post everything, and follow us on social. Thanks a lot. Cheers, guys.
And if there are any questions that I can answer, you can reach me at gary@theblincgroup.com. It's Gary, or call or text me, 347-346-0924. We're happy to engage. We're part of this industry. We want this industry to grow. We want to be productive and value add part of the industry. So happy to discuss anything with you.
There you go. Not just vapor.
Thank you.